Everyone, welcome back. Thank you so much for your feedback. I really love hearing from all of you and love taking in the constructive views you share as well. All right, let's get to it. So I'm going to talk about the Russia and Ukraine tension. First off, all stocks are going down. It's not just AMC. Let's talk about why. Let's talk about how this tension between Russia and the Ukraine affect us as stockholders. Because there's tension between Russia and the Ukraine, it has brought on a lot of things to come. The US has 8,500 troops ready to deploy to Eastern Europe. The troops are ready to go in just 5 days, as opposed to the regular time being 10 days. So how does this affect us as stockholders? Well, gas prices are going up. It's going to be $100 a barrel. Financial markets slide with the Russia situation. And with the possible invasion of Ukraine by neighboring Russia, it would be felt across several markets. The potential escalation of tensions could be felt across global markets, in that inflation and multi-decade highs and impeding interest rate rises have made for a bad month for bond markets. But an outright Russia-Ukraine conflict could change that. 2-year U.S. Treasury yields have seen the biggest monthly jump since 2016. And 10-year rates appeared headed for the key 2% level. In Germany, 10-year yields rose above 0% for the first time since 2019. A major risk event usually sees investors rushing back to bonds, which represent the safest assets on the planet. And this time may not be different, even if a Russian invasion of Ukraine risks further fanning oil prices, and therefore inflation. Other safe havens include gold, already at 2-month peaks, grains and wheat. Any interruption to the flow of grain out of the Black Sea region is likely to have a major impact on prices and add further fuel to food inflation at a time when its affordability is a major concern across the globe following the economic damage caused by the COVID-19 pandemic. 4 major exporters: Ukraine, Russia, Kazakhstan, and Romania. They ship grain from parts in the Black Sea, which could face disruptions from any military action or sanctions. Ukraine is projected to be the world's 3rd largest exporter of wheat. Russia is the world's top wheat exporter. Natural gas and oil. Energy markets are likely to be hit if tensions turn into conflict. Europe relies on Russia for around 35% of its natural gas, mostly coming through pipelines which cross through countries to the Ukraine. Russia and Ukraine assets will be at the forefront of any market's fallout from the potential military actions. Both countries' dollar bonds have underperformed their peers in recent months as investors trimmed exposure amid escalating tensions between Washington and its allies and Moscow. Ukraine's fixed income markets are chiefly the remit of emerging market investors, while Russia's overall standing on capital markets has shrunk in recent time. Bottom line, Russia is possibly invading Ukraine. We are ready to send 8,500 troops in high alert to be ready to deploy them in only 5 days due to the alliance with NATO. Any conflict will cause a fallout in the markets. Again, this is affecting all financial markets. What do all of you think about the stocks going down? What do all of you think about this conflict? How can we prepare for the stock market crashing? Let me know in the comments below. As always, thank you for tuning in. Please remember to subscribe and hit that like button. I'll see you guys next time.